earlier, the World Bank projected sub-Saharan Africa's economy to slow this year as business activity in South Africa and Nigeria plummets. The international lender says growth is likely to slip to 1.6%. Of course, the region has been one of the world's fastest growing over the past decade, but a commodities slump has hit oil and mineral exporters hard. Nigeria's GDP contracted during the first 2 quarters of the year due to low oil revenues and a fall in manufacturing, among other things. In South Africa, the economy contracted slightly in the first quarter before rebounding in the second quarter of the year as a result of an increase in mining and manufacturing output.
Countries that are continuing to grow fast, we need to build buffers. We need to build buffers to withstand periods of global turbulence and tighter external conditions.
Well, Daniel Ringes now joins us with an update on the IMF's World Economic Outlook report. Daniel, is always welcome to the show. Now, as we heard there, the IMF has revised global growth downward. And according to one of the researchers, Maurice Obstfeld, taken as a whole, the world economy has moved sideways. Now, give us some insight into the risks and, of course, the uncertainties highlighted by the fund in that report.
What struck me most was Maurice Obstfeld's use of behavioral psychology in describing some of the risks to the global economy. Because we've had this period of slow growth for so long, he believes that what's likely or possible to happen is that people, consumers and companies believe that will be sustained and their behavior will reflect that condition of believing that slow growth will continue, and therefore it will feed upon itself and make the problem worse because of the behavior of the reaction to what they think is going to happen in the future. A lot of psychology involved there, but he's saying that that would have real impacts. Secondly, as you were touching on earlier, there is real concern at the fund about the rise in this populist politics. So when you combine slow growth and trends in Western countries where you've got less opportunities for those on the lower end of the scale, a level of income inequality, then you're going to see more of this sort of populist politics, which is anti-globalization, which is anti-trade. And he sees that also as being a major risk that not only impacts those Western countries, but then has a trickle-down effect on developing nations, particularly those who are reliant on their exports.
Well, Daniel, when we look at, of course, the outlook for emerging markets, it seems more positive, not as grim as the global outlook. Now, the IMF did say they would see an end to recession and, of course, stabilize. Does this outlook translate across sub-Saharan Africa? We did hear that it cut its 2017 economic growth forecast for Nigeria and South Africa as well. Give us some insight into what the picture is for the continent.
Well, I think I've never seen a set of projections so uneven within sub-Saharan Africa. So, for example, when they're talking about Nigeria, they're talking about a decline in growth by about 1.7% as the result of the problems with the low commodity prices and the disruptions to oil supplies, the lack of foreign currency in the country, and related problems. Some of those other trickle-down effects also impacting Angola, and to a slightly lesser extent South Africa because of its more diversified climate and because it's made improvements in things like the power sector. But then when you go to look at some of the commodity importing countries, Cote d'Ivoire, Ethiopia, Kenya and Senegal, they are going at a happy clip around about 5%. And the key there is a level of diversification and business investor confidence that is making those economies far more attractive moving forward. So we have a very diverse picture across sub-Saharan Africa.
Quite right. Well, many thanks for that insight, Daniel. Daniel Ringes joining us there in Washington, D.C.